Took a short on euro dollar after price aggressively moved into this breaker above all of this accumulation zone from Asian session and last week Friday. Price moved up with this aggressive bullish candle after this doji candle, and to me that is suggestive that the next candle could potentially be a bearish engulfing candle, or we'll see a series of bearish candles afterwards. Main reason for entry: bearish order flow on the weekly time frame. We are, I'm anticipating price to take out this sell side liquidity this week. We have been in a strong bearish order flow. We took out on election week this high, tanked again last week, barely a pullback, and then dropped, closing below this level. And going into this week, I am predicting bearish order flow. So I wasn't going to trade today, but because of the fact that we took out Friday's high, Thursday's high on Friday into that daily time for fair value gap, which we held the 50% level off. To me, after that, I don't expect price to push higher up into that level and take out that liquidity, especially with no news coming out this week, pretty much all week until Friday. So an aggressive move up is what I normally look for anyway, in a bearish order flow, or an aggressive move down in a bullish order flow. And to me, that was a good indication that price could potentially find a resistance around that level, especially during London session, which came at around 9 p.m. UK time. So yeah, as that candle was printing, I took a short. I only risked 0.5% on this because, like I said, I don't really trade Mondays, but this looks like this is just a good trade to get into, especially because, like I said, bearish order flow, we've pulled back, we took out a swing highs liquidity, and then we dropped lower. We pulled back aggressively into a high time frame point of interest for me after accumulation, this accumulation right here, and then this manipulation during London session. It was one of the main reasons for entry, because I don't expect price to take out liquidity up here, because we've already taken liquidity off this high and then dropped, and I do anticipate price to continue lower, at least to these levels first, and then we can think about that sell side liquidity afterwards. But right now I want to see those levels taken out, and I'll probably take partials at that level and let the trade run out. This could potentially be the high of the week before we take out this sell side liquidity, so I want it to be in the trade at the peak. Yeah, original 0.5% on one account, which I have almost passed my second phase, so I didn't really want to risk too much, and I risked 1% on my other accounts on this. So let's see how that plays out. After I entered that trade, I gained more confidence because of the fact that on the 15-minute, I saw this bearish engulf candle, and exactly at that level, I started to see this candle, this bearish candle. And on the 5-minute, which is clearer, I saw a bearish engulf, this bearish candle that took out liquidity of the low and the high. And after seeing that, to me, it's an indication that we could potentially see a reversal around that area. And after that, I was a lot more confident with holding this trade. And then I saw a pullback, a double top essentially, and then price tanking was a really good confirmation that we might continue to hold that level. We might not see this as a bearish engulfing candle next. This might be a low wick candle, and then we just shoot up. Anything can happen. So I always have to be prepared to take that loss. So this is how that trade played out. We held this level where I entered slightly. It pulled back, and then because Monday, like I always say, Monday we might not actually see price continue lower. And then we started to see that reversal. Price pushed up to cut all of this high above that daily time for fair value gap. Went above that fair value gap, took out Monday's high, right? So Monday was around here, or this was the Monday's high. Created the high on Monday and then dropped. Then pushed back again, and I believe this was on a Wednesday. If you look on the daily time frame, right? Tuesday created this inside bar candle, and then Wednesday price took out Tuesday's high and Monday's high, and then just tanked. For me, I exited that trade at the Asian session low, or the London session low, after my entry, or I took 0.5% off around here. So yeah, this was I wanted to aim down to this low for my initial target. I took out my targets off at this London session low, where I took out 0.5% there, and then let the rest of the trade run out where it hit break even, and that's fine. It's a Monday trade. Mondays I usually wait for price to play out, and then Tuesday I wait for Monday's high to be taken out, and then take a short. which on Tuesday we didn't take out Monday's high, which really annoyed me because I was looking for a trading opportunity to short on Tuesday. And then Wednesday we took out that high, and by then I wasn't really looking for any trading opportunities. And also I was not really trading last week after Monday. But yeah, only reason I took this trade was because such a good setup, and the main reason I exited that trade at this London session low, took out half my position off, was because of the fact that it's Monday, and Mondays sometimes I've noticed during London session, price does continue that trend that is in on the weekly time frame. However, it might not go, it might just be a fake push down on that trend, and during New York session it starts to push up, and this is exactly what it did, and that was one of the main reasons I exited half of my position. That it just goes to show, no matter how good of a position it looks, right, of a trade it looks, even though we took out this high and I was expecting, or I was predicting price to not push higher up because we'd already taken liquidity and held that daily time for fair value gaps 50%, that price can just do anything. It doesn't matter whether my prediction was that it's going to continue down to this low, which it did eventually, which is fair, but it doesn't mean it's always going to play out in a way from where I entered the trade, right? I entered here and I expected price to come down here. It didn't, because it was Monday. The week had still not played out. Price had still not manipulated the week, and it did. And then this looked like it was going to come down and continue lower. It didn't. Pushed up again one more time and then dropped. It dropped and eventually took out that sell side liquidity right here and came into this weekly time frame order block where it found some support. After seeing price come down and take out this low right here, the first sell side liquidity, I was quite hesitant of price coming down and taking out the next low. I wasn't really too confident in it. I just wanted to take a bearish trade, maybe down to previous week's low, but price eventually did end up taking out that low. Another thing to consider here is, right, when price took out this high right here, my analysis was that we were going to come up to this buy side liquidity eventually, and it didn't. We put in this double top right here, took out liquidity of that double top, and then tanked. I think that because of that gives the trade more push to continue lower below this level and down to this, because had it came into this low and again consolidated and pushed up, then that doesn't really make sense to me. Whereas we, after failing to make a new high and taking out this buy side liquidity and dropping like this, there is some conviction in the trade that it's going to continue lower. It needs some really strong point of interest to find some kind of support, and this one where it found support at the end of last week above this monthly time frame fair value gap, weekly time frame order block, and a second overlapping sell side liquidity is a very good location for price to start finding some kind of a support.